Good afternoon, ladies and gentlemen. Welcome to my episode number 12. I picked up this topic today, refinance. I've touched on this topic in a different wording last time, that I spoke about cash flow. It is a something similar topic. The reason I'm talking about refinance today was I was driving with my daughter yesterday to from Belleville to Trenton, and I told my daughter, okay, let's refinance your house and let's buy one more property for you. She asked me, Dad, is it bad? Isn't it bad refinancing? I heard that refinancing is bad. Will this affect my credit? Will this increase my monthly payments and all? She had a lot of questions. I said, if my daughter is under dark, then many of you may be under dark too. So, hence, decided to talk about it today. What is refinancing? Refinancing your mortgage basically means that you are trading in your old mortgage for a new one with the new rate, new term, and possibly a new balance. When you refinance your mortgage, your bank or lender pays off the old mortgage with the new one, and this is the reason is termed as refinancing. Why people refinance? Most of the time to get a lower interest rate and shorten the monthly payment means increase their cash flow, pay less monthly payment. Also, if you have a private mortgage which is paying, you're paying a high interest on a private mortgage, and you have your mortgage with the B lender. I don't want to name them. There those also high rate mortgages. And if your lifestyle has changed, your income has changed, your credit has changed, consider refinancing your mortgage to pay off that high interest mortgage already you own. All right. So I encourage you to go back to your broker or a banker, see they might be able to help you with some solution, right? And if they don't help, you know where to go, right? And also the people refinance to take advantage of turning some of their equity they have earned in their home into cash, possibly to do following things with that cash, to pay for their children's education with that refinancing money, pay off debts. It's okay to have debts, all right, but having debts and not taking action is crime, according to me. Even everybody in their walk of their life, they did have everyone, most of the people in Canada, they have a debts, but acting upon that, correcting that particular situation, there are many solutions available. Again, I'm telling you, go back to your bankers or a mortgage broker and try to get a solution and pay off those, high interest paying debts. I will be, towards the end of my talk, I will be sharing a slide which we helped a client how we changed their life. They had a debts, and they had a high uh, interest mortgage. What we did, I'll talk about it towards the end of this my small talk. And the third thing, what they can do is they can take a vacation with that extra money of refinance. They can you can do renovation, buy an investment property, invest. I mean, if you're stock and mutual fund, savvy guy or a gal, they invest in that stocks and mutual funds. I'm not advising this. I said you could do this, right? So don't take this as advice, but you could do this kind of investment by your refinance proceeds. And also invest in private first and second mortgages. You can be a banker yourself instead of you know um, keeping the money in the bank. Loan them out as a private first and second, which is more secure than keeping the money in the bank, which doesn't pay nothing, right? So these are the things you can do. I just named a few. You can do many things with the refinancing proceeds. And there are types of refinances. There are quite a few types. Cash out refinance. In a cash out refinance, you can refinance up to 80% of your current value of your home. Means like if your house is valued at $100,000 and you owe 60,000 on a mortgage, your bank or a lender can give you, as qualified borrower, you have to qualify, uh, 20,000 additional in cash out, making your total mortgage to 80,000. All right. So your loan to value is 80%. That's what I'm trying to tell you. So, uh, 80,000 minus 60,000, you already have a mortgage. So 20,000 you get to get in your bank account. And there is a second one is a rate and term finance. I have not seen that much. Basically, what clients want to do is to take advantage of the lower rates. They either extend their amortization or lower the amortization depending on their situation. They refinance to they pay off high interest paying mortgage, and to do the refinance to reduce the interest rate. And as I said, they can either extend their amortization or lower the amortization depending on their needs and goals. Okay. You can also take HELOC, that is a home line of credit, without breaking your mortgage. For example, if you are on a fixed rate and if it costs you huge penalty, you can take a home line of credit from a bank, which is generally the banks are charging prime plus 0.5% nowadays. It is a better solution than paying that penalty and refinancing the whole mortgage. Things to know before you refinance: know your home equity. See how much equity in your house you have in the house, and you have to have that minimum more than 80 20% equity in the house, more than 20% equity in the house. And know your credit score too. And if your credit is good, you can get a better lender. If your credit is bad, you may have to go to a B lender, or maybe you may not qualify for the mortgage. You may have to private, will be another answer for you. All right. And know your debt to income ratio. So how much debts you have, what's your income, and stuff like that. You can consult your mortgage broker or banker to get more knowledge on this one. And fourth one is the cost of refinancing. Very, very important. By refinancing, are you saving or you're losing? If you're losing the money, do not refinance, which is more unlikely, right? So if you want to pay off your debts, after paying off the debts and everything, how much money you're going to save, which is very, very important. Do your homework. And also keep in mind rate versus term. So what kind of term you're going to take, what kind of rate you're going to jump into, whether you're taking a fixed rate or variable rate, what is good for you, how much, where you're going to save money and stuff like that. Keep those points in mind. And the sixth point is, when you refinance, check for any hidden cost, like is the broker fees, like if the broker is charging some exorbitant fees for you. So is there a lender fees, appraisal cost, legal fees, penalty to break your mortgage? First thing, before you think of going for a refinance, call your bank, find out how much penalty you're going to pay to break that mortgage. For example, if to break the mortgage you're paying 40,000, all right, and you're getting 80,000 as a refinance, will that make sense? Think about it. All right. Know your taxes, how much tax you're going to pay, and like what are your property taxes, which is important when it comes to application stage. And also make sure, as I told you, are you on a variable rate or fixed rate. And now I'm going to show you a scenario. Let me just give me a second. Let me bring the slide to you. This is what we did to one of the client. If you look at in the slide on the far right hand corner the current budget. That was the current budget when client came to us. His property value was 650,000. He had current mortgage of 413,000, and is this was the middle. There is a budget breakdown. You had a monthly mortgage payment of 2,063, and the total home expenses were 2,440. Plus, he had about $100,000, 100,978 debts. So their payments total to 3,741 that you can see at the bottom, which are highlighted in the green. I'm not sure whether you can see clearly. Pardon me. That's the best we could do. And the middle section, what we did was we refinanced his property, and we gave him a total mortgage of $645,000, and we paid off those $100,000 debts to him. He doesn't have any debts anymore, and we gave 126,000 in change, is highlighted in red, extra money to him to buy investment property. What did we do by doing this? We, first of all, in the first here column, we reduced his monthly budget from $3,741 to $3,047, almost $700 less. By buying an investment property, he had a rental income. After paying the mortgage, principal, interest, and taxes, he saved another $1,317. So what we did, we increased the family cash flow by $2,012 a month, plus he purchased one more property. Look at the situation. He had a worse situation on the right hand side. By just coming to us, we have made him another landlord of a rental property, and we also reduced their monthly budget from 3,741 to now he's paying just $1,700. So imagine you could be in the similar situation. Having said that, if you are in this situation and if you don't have any solutions, again, I'm telling you to contact your banker or a mortgage broker. And if he cannot help you, we can make the custom budget for you. So there are solutions, guys. Use them. Talk to the professionals. Change your life and enjoy your life. This is for today. Thank you for watching. And before I sign off, once again, thank you so much. I had only 3 subscribers as of last week, and quite a few people have subscribed to my YouTube channel. I want to build that subscribers list. Please subscribe to my channel on YouTube. I want to build my audience. Help me out. Press that bell button on a YouTube. Till then, and help me out. Thank you. And if you like, share this video to your friends and families, maybe your kids or your children, and help them out. Hope you enjoyed my little talk. Thank you once again watching. See you next Friday, hopefully next Friday, same time, same place. Thank you. Have a wonderful weekend. And by the way, do not forget to change your time Saturday midnight. Okay, and time is changing from Sunday. Don't forget to change your clocks. Bye bye.